Alright, Dave Knight here, and let's call this Strategy 1 Part 3 because I actually want to show you another example. And Strategy 1, once again, we're going to use the same, another example of, and we're going to go look for something between here September 2nd to August 16th, and an example of a trade. Basically, I'm going to look for the next one past where we were at September 1st. So strategy 1, moving average crossover, 50 bar, Mako 200 bar, down red bars. So let me go hunt it down, and obviously you'll see me live again. Now once again here, this was the trade. I removed everything off of this, but that was the last trade that we were looking at. And what I'm looking for now is a crossover. Here's a crossover, and here comes our red bars in. Doesn't count. And we'll get into why this doesn't count a little bit later, but right now this one doesn't count. If we want to get into long or short of it, I pretty much don't look for trades. This comes in at the very low part of the market, evening. It crosses over here and stays above, comes in underneath here, and this is kind of part of strategy 2 more than strategy 1. So when it crosses over, where are the bars? So I guess this is a good example to look at. When we have our crossover, where are the bars right now? Are they above or below the market? They're above, right? So therefore this crossover isn't strong. And this would be part of strategy 2, by the way. And maybe we'll come back and hunt this down in a little bit. But this is not strategy 1. This is more of strategy 2. We'll get back to that later. Because strategy 2 is going to be dealing with the open outcry period of time, basically. And we'll get into that in a while. Anyway, so that's that, and that's why that is not. This is a crossover. Yeah, it is a crossover, but the bars are above the crossover. When our other example, we have a crossover and the bars are underneath. So this one's valid because we have the red bars, and here we are crossing, and here are the red bars underneath, right? The trend is your friend, looking for the market to be underneath. It gets kind of confusing when you're right on top of it, and this becomes more of part strategy 2. I don't want to confuse you any further right now, so we're looking for a strategy 1 trade. Alright, here comes another example here that I want to show here. Right here. Now we do have a crossover. Here's our red bar. It's in the dead zone. Now, how do I determine dead zone? Let's go over this because this is kind of important, and you'll hear me say about dead zone a lot. And in this basic trading strategy, we want to be very careful in the dead zone. And the dead zone is going to pretty much mean, for your purposes, a dead zone is a sideways market. You want to stay away from dead zone trades. So dead zone would be a closes happening in between the 50 and the 200 bar range. This is an example of it right there. This bar, and let me actually blow that up a little bit. Let me zoom in on top of the zoom. Here's your close underneath here, and the example being we need to have enough room for profit. And right off the bat, you can see that this is into a trading range at this point. And we're going to determine this is the dead zone in between your 50 bar and this. And this is more of an advanced concept, but I want to bring this in here as I want you to see some examples as we go on through here. Here is an example of a valid trade signal right here. But there's no fill. And then the bars actually end up crossing over later on here. But this is end up being a trade signal right here and no fill on the trade. So let me continue to hunt down a trade for us. Alright, here is our next trade. And like I said, strategy 1 doesn't trade an awful lot. But here's your crossover, and this is just like the last one, right? I want you to get your eyes set on this. Here comes your 50 bar underneath, closing under. And notice it closes under, and here's our first red bar close. right here, this bar right here happens to be this one. This one is a better bar closing under, and it's breaking out of a range here. So you're inside a range on this one. Not such a great one. This one here is your close. This is the one you want. I know it's a doji bar, but this is the low you want to run off of. This one's trading in a range. This is breaking out of a range. So look, and let's just draw a quick line here on the chart so you can see what I'm talking about. Minor support. We talked about minor support a little bit on a video content, right? This is called minor support, and we don't want to get ourselves involved to our best of our ability into minor support right in that area, right? So let's move it up to what the area of support was. Here is our area that we're looking for right here. So this ends up being our trading signal right here. So the market is on this bar is at let's see, a low of 1202, so 1202. So our entry point will be 1201 and a half. And you can see that we got filled a couple bars later. 5:15 again. We like that 5 something in the morning. Now, like I said, it doesn't happen. Maybe it's not going. This crossover is not going to happen when you're watching the particular trade. You're in front of your desk. Maybe it's something you can get programmed. This is a very basic trading strategy that can run around the clock for you. That's up to you. I'm just showing you a valid trade signal, and then you can go from there. Now, what's our ADR? 38. 38 is 3.8. 3.8 is, so let me write that down again. So, and let me go ahead and put an arrow out here for you too. Get that arrows going so you can actually locate it. And let's just move this over. 38, right? And that translates out to 10% of 38 is 3.8, right? 3.8. We want to be conservative. So we want to round down or round up on the stop loss. Now this is your call. You can round down. I would recommend to round up at 3.8. And we want to go up to 4. So we want 4 points here. This is my recommendation. When you run to 0.6, you want to round up to the next point. So 3.5, 3, 4, 3.5, so it's up to you. You want to round up to that next hole. So that's rounding up to 3.8 rounds up to 4. So 4 points. So that's becomes our stop loss. So we're basically looking at a $200 stop loss per trade, but our profit objective is to make 4 points of 50 by 4 is 200, and we're looking for a $400 profit target. So 4 point stop loss, and we're looking for an 8-point win. And let's see what happens. Alright, so we have 1201 and a half, and we get filled on this bar, 1201 and a half. 4 points is 1205 and a half. That becomes our stop loss. That's up here, 1205 and a half. You can see it does run 1205 and a half up here at 9:50 a.m. in the morning. Our target on this trade ends up being 8 points, which is 1201 less 8 points, be 1193 and a half. You can see that it does go there, but it runs this first before it does that. So, was this trade profitable, or was this trade a break-even trade? Well, let's figure that out. So 4 points is where our point that we need to move to break even plus a point, right? So where do we get 4 points so that we can go ahead and lock in a point? 1201 and a half less 4 points is 1197 and a half. So where do we get that? 1197 and a half right here. Now my question to you, did we run 1205 and a half before we ran 1197.5? Answer is obviously no. Here's our break even plus a point mark right here. We end up going to 1200.5 at that point. And you can see that it does run. Now this point we ran 4 points our direction, and we're looking for the market to continue to run down at this point. Obviously it does not once again, and it gets us out at break even. So this is another example of us getting $50, right? So per contract, just one contract trading. And we're just doing one contract trading right now. This is a very basic trading strategy, looking to build your account. I'm not throwing in multiple contracts on this. We're just looking at a very simple trading strategy on strategy 1, looking for a way to make a little bit of money in a high profitable trading position, trading with the trend. Strategy 1, looking at that 50 bar over the 200 bar crossover. All right. There's another example of us getting out at break even, a $50 win for our time. No, it's not great, but hey, it's not a loss. We'll see you on that next video. We'll be looking at strategy 2 on our next video.